Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing world of corporate filings. Today we're diving into a proxy statement from Verve Therapeutics, and let me tell you, it's not just a bunch of boring numbers and legal jargon. We'll see who's up for election, what the auditors are casting, and if the executives are getting paid too much. It's like a reality show but with spreadsheets. This document is all about Verve's upcoming annual meeting of stockholders in June 2025. Basically, it's a guide for investors telling them what's on the agenda and how to vote. Think of it as a cheat sheet for the shareholder elections. One of the main things is electing directors. Verve has a system where directors are divided into 3 classes, each serving for 3 years. At this meeting, stockholders will vote for 3 Class I directors who will serve until 2028. It's like a school election, but with much higher stakes. The nominees up for election are Lionel Coates, Jody Morrison, and Krishna Yeshwant. The board recommends voting for these folks. It's worth noting that these people are already on the board, so this is not new blood. We also get a glimpse of the directors who aren't up for election this year, such as Alexander Cumbo, Michael McLean, and Sheila McCall, whose terms end in 2026. Then there's Bert Adelman, Sekar Kathiasan, and Aronia Tartsis, with terms expiring in 2027. It's like knowing the players on the field for the next couple of seasons. Next up is a vote to ratify the appointment of Ernst & Young LL as Verve's independent registered public accounting firm for the year. The board recommends voting for this. The company details its audit pre-approval policy. It's important the auditor remain independent so that the audit result is a true reflection of company accounts. Let's talk money. In 2024, Ernst & Young's audit fees were a little over $1 million, with another $30,900 for tax services. In 2023, the audit fees were higher at $1.36 million and tax fees were $60,750. Seeing the numbers go down is usually a good sign. Here's the big one: executive compensation. Stockholders get to vote in an advisory way on whether they approve of how much the top executives are getting paid. It's a non-binding vote, meaning the board doesn't have to listen, but they usually do. Okay, let's see the numbers. In 2024, the total compensation for the Chief Executive Officer, Sekar Kathiasan, was a hefty $7.4 million. Andrew Ash, the president and COO, made $2.38 million. A few more millions there. What's interesting is Andrew Bellinger, the former chief scientific officer, despite resigning in June, still had a total compensation of $3.443 million June, still had a total compensation of $3.43 million because he received severance payments. This table shows unexercised options that executives have, basically meaning the potential to make lots more money if the stock does well. Now, let's talk about some corporate governance issues. Has the board determined that everyone except for Dr. Katharasan, the CEO, and Dr. Tartsis are independent directors? Seems like someone at Vertes and Verve had a sleepover, so she can't be impartial enough. Verve has a few key committees: an audit committee to oversee the books, a compensation committee to decide on executive pay, and a nominating and corporate governance committee. Like high school, there are lots of groups running behind the scenes. In February 2025, the company established a new research and development committee. The filing states that none of the people on the compensation committee are officers or employees of another company where Verve's executives also serve on the board. It's supposed to prevent back scratching, but who knows what happens behind closed doors. Good to see that Verve takes insider trading seriously, prohibiting things like short sales and hedging transactions. Although Martha Stewart might have some advice if they get stuck. Verve also has a clawback policy. If the company has to restate its financial results due to misconduct, they can claw back any incentive-based compensation that was wrongly awarded to executives. Serves them right. The board believes that separating the CEO and chairman roles brings balance. CEO focuses on running the company while the chairman leads the board in its oversight role, which is to provide risk management to the company as a whole. Here's where things get really interesting. The proxy statement also includes a pay versus performance section, outlining how executive compensation lines up with the company's financial performance. Trefty, here's a quick peek at some key numbers. Q1 2024, the CEO's summary compensation was about $7.4 million, but it also says the compensation actually paid to CEO was negative $88K. This means he actually lost a lot of money since his money is very closely tied to company options. His gains were a lot higher in previous years. The company lost a lot of money, but shareholders actually made money. How does that even make sense? It's because the company has high potential and is still very speculative. One key detail is the policy regarding equity awards, basically stock options or restricted stock units. These are used to reward and motivate employees. The company's stock option plans seem reasonable. They did not appear to take into account material non-public information when granting equity awards. Verve and Vertex were partners for a few years. During the year ended December 31, 2024, Verve recognized 11,2090 million to research services performed during the period. It's worth it to be on good terms with other companies. Let's look at who really owns the company. GV, a venture capital firm, holds a big chunk, about 13.9%, followed by BlackRock and BVF Partners. It always helps to know your company's biggest shareholders. So what's the story here? Verve is seeking investor approval for a few standard proposals, electing directors, approving the auditor, and giving a thumbs up to executive pay. There aren't any massive red flags. It's a growing business and the CEO takes his share of the beating when the company does bad. Inksquall, Entipedentral, what do I think about Verve? Verve seems to be at a pivotal point. Their financials are still quite a ways from positive, but their products hold promise. A big opportunity is to keep strong relationships with large players like Vertex and find new potential drugs. Overall, Verve is a high risk, high reward. Do I think about Verve? Verve seems to be at a pivotal point. Their financials are still quite a ways from positive, but their products hold promise. A big opportunity is to keep strong relationships with large players like Vertex and find new potential drugs. Overall, Verve is a high risk, high reward situation. Thanks for watching. If you enjoyed this deep dive into Verve Therapeutics' proxy statement, please hit that like button, leave a comment, and subscribe for more corporate decoding. See you in the next one.